US stocks extended their rally on Thursday, Jan 22nd Eastern Time, marking a second consecutive day of gains. The three major indices all closed higher, erasing Tuesday's pullback losses. Cooling global economic uncertainty and solid economic data provided dual support, with both tech stocks and popular Chinese ADRs advancing in sync. The market's overall profit effect significantly improved. Key closing data showed the market trended higher with a bullish bias. The Dow Jones Industrial Average rose 315.21 points, 0.63%, to close at 49,442.44, solidifying its hold above the 49,000 level and turning positive for the week. The Nasdaq Composite gained 214 counterweight points, 0.91%, to finish at $23,530.02, led primarily by tech stocks. The S&P 500 added 37.85 points, 0.55%, to reach 6,944.47, with most sectors advancing and only a few niche areas retreating. The VIX Fear Index fell sharply, and the Russell 2000 Index hit a record high, highlighting strong momentum in small and mid-cap stocks. The core drivers for the two-day rally were easing geopolitical risks and support from economic fundamentals. Trump's announcement to cancel tariffs related to Greenland and the Framework Agreement, reached for Arctic cooperation, alleviated concerns about renewed transatlantic trade friction. Concurrently, robust U.S. economic data provided a solid foundation for the rebound. Q3 GDP growth slightly exceeded expectations. November marked the second consecutive month of growth in personal consumption expenditures, and last week's initial jobless claims came in lower than forecast, underscoring resilience in both the labor market and consumer spending. Structural opportunities within sectors and individual stocks were prominent, with the technology sector broadly strengthening. Tesla surged 4.15% after Elon Musk announced at the Davos Forum plans to establish a U.S. robo-taxi network by the end of 2026 and launch the Optimus humanoid robot by the end of 2027. The AI industry chain maintained its strength. Nvidia edged up 0.77% following Jensen Huang's comments on continued AI infrastructure development. Micron Technology gained 2.18% after institutions raised its price target. Meta soared 5.66% on news of introducing ads to Threads users, boosting confidence in its accelerated monetization. Popular US-listed Chinese stocks also rebounded, with the Nasdaq Golden Dragon China Index rising 1.58%. Alibaba jumped 5.06%. Pinduoduo, Li Auto, and Bilibili gained 3.21%, 3.54%, and 4.53%, respectively. Only a few stocks like Futu Holdings bucked the trend, falling 2.39%. Additionally, the temporary shutdown of two major oil fields in Kazakhstan fueled supply tightness expectations, pushing the energy sector higher and further solidifying the rebound. From an investment bank perspective, Goldman Sachs' Outlook report forecasts a 12% total return for the S&P 500 this year, US GDP growth of 2.7%, and two potential Fed rate cuts, 25 basis points each. Within the year, however, risks persist. Bank of America and Citigroup are reportedly exploring credit cards with a 10% interest rate cap, suggesting financial regulatory adjustments that could create sector divergence. JP Morgan Chase's gains were limited after being sued by Trump for $5 billion damages. Such events could trigger short-term volatility. Looking ahead to Friday's Jan 23 Eastern Time session, US stocks are likely to trade with a slightly positive bias, but with diminished momentum. Three key signals warrant close attention. 1. Geopolitical developments, as the Danish Prime Minister emphasized Greenland's sovereignty issue, requiring vigilance for sentiment shifts. 2. Tech stock movements, focusing on any new catalysts for Tesla and Meta, and signs of divergence within the AI sector. 3. Comments from Federal Reserve officials and investment bank ratings. For instance, Alphabet, Google's parent, being upgraded to a strong buy could boost specific sectors. From an operational standpoint, it is advisable to focus on the AI industry chain, the Tesla supply chain, and leading fundamentally sound Chinese ADRs to capture structural opportunities. At the same time, manage position sizes, avoid financial stocks significantly impacted by regulatory changes, and closely monitor marginal shifts in geopolitics and policy. In the short term, US stocks are in a phase of risk appetite recovery, suggesting choppy upward movement could be the main theme for next week.